Now, gold is going to return as money. It's just a matter of time. We are living through the ultimate fiat currency experiment, and we can see where that has gotten us to a world of never ending inflation and mistrust. Now, if we look through history, civilizations before us know that true money has always been gold. The ancient Chinese used gold, the Romans paid people in gold coins, and America's founding fathers recognized gold as money as well. It was even written into the US Constitution where gold and silver were legal tender. But we have veered off course and became too inventive with our money. It wasn't always that way. Now, gold actually started out as money directly during the classical gold standard, and that persisted all the way to 1971 through the Bretton Woods system where the dollar was pegged to gold. Now, I want us to take a look at the life cycle of money. It shows us a timeline of how money starts out as free market money that has total trust, money that answers to no one and doesn't require the backing of any government. But we moved into the fiat currency era the moment Nixon broke the gold standard in 71, and for decades, trust started to erode. Now, if I had to guess where we are right now, we are most likely at stage 6, where confidence is being lost and we are seeing currencies across the world collapsing. And we are one step away where countries start to choose free market money again to transact with each other. And by that, I mean buying and selling in gold. Now, when we talk about collapse, it goes beyond just the value of money eroding. Yes, inflation is the biggest reason why there's no more confidence in money, but it goes deeper than that. I want us to look back at the last 9 months of this global currency crisis. Now, countries all across the world are getting their currencies devalued against the dollar. We are seeing many of them literally crash to hell. And it doesn't matter if you're a developed country or an emerging economy. The Japanese yen is cratering, the euro is below dollar parity, and the Turkish lira is already in the toilet. This currency devaluation is causing inflation to soar, supply shortages to happen, and bond markets on the verge of collapse. What we have is a global fiat currency confidence crisis. Because the whole world is still tied to the dollar, many countries are at the mercy of US monetary policy. If the Federal Reserve decides to hike rates or print money, your local currency is going to be impacted, it's going to be affected, there's no escaping it. And right now, the Fed is tightening and many currencies are depreciating and they can import less stuff because everything is priced in dollars. There's a global dollar shock happening. And hold on to this thought because this is one of the most fundamental reasons why gold will come back as money sooner or later. Confidence as a whole is lost and the world needs a neutral arbiter to bring back trust to the financial system. And let's talk about the value of money. We can see that ever since the gold standard was broken in 71, we have been in a world of eternal inflation. Except for 2008, inflation has been around 3 to 4% over the past 50 years with multiple spikes in the 70s and 2022. We are living through an inflation hell right now and it's going to stay high for many months to come. And we need to understand why this is happening. We are living in a world of boom and bust cycles. Every 15 to 20 years, we face an economic crisis because money has been weaponized to save the economy and the markets time and time again. There's no more free markets nowadays. We can see this happening all across the world. Economies, especially in the West, no longer have the stomach to ride through the tough times and let the free markets rebalance and readjust. There's always an intervention around the corner. Now, the UK bond market bailout is the perfect example, and we all know what happened. Bond yields started to rise because of rate hikes, and the British pension funds were on the brink of a collapse thanks to leverage, and the Bank of England had to step in to bail them out, pledging to spend £65 billion to buy up UK bonds. Now, this is debt monetization, also known as money printing, which is inflationary. We can see inflation in the UK has smashed past 10%, and a big part of it is higher commodity prices for sure, but the money printing they just did is going to keep inflation high. This is additional money circulating in the system. And even today, as rates are going up, there are still countries like Japan keeping rates low and printing money to prevent their bond market from collapsing. And this is why the money printing games won't end. Yes, the United States is hiking rates, but it's likely they will pivot and start printing money if their bond market also starts to crack. The bond market controls everything in the economy. And we can see the 10-year treasury yield is almost 4%, and the higher this goes, the closer it is to pushing the bond market towards a crisis. If we take a look at the bond benchmark, we can see that companies are forced to borrow at crazy high rates. The US corporate debt yield is almost 6%. Just a year ago, it was at 2.1%. That's triple the borrowing cost. And if you're a triple C rated company looking to raise money, you might as well forget it. Your bond yields will have to be over 16%. And this is why when push comes to shove, the US government will likely step in to rescue the bond market in order to save the economy as a whole. Money will be printed and the dollar will get devalued even further. The damage will be done to the currency because between a total economic Armageddon or inflation down the road, which do you think they will choose? And this is why gold is a more reliable store of value. It can't be debased or printed from thin air. And let's talk about the counterparty risk of money today. Now, the most obvious is the financial counterparty risk of the currency's issuer. So, for example, if you're holding a bunch of euros and the ECB decides to suddenly print up trillions of euros, the euro will suddenly get devalued against other currencies, especially the dollar. Your purchasing power will evaporate. You are at the mercy of the ECB. But let's also talk about the more dangerous counterparty risk that countries face today, which is economic sanctions. So we all know what happened to Russia after they invaded Ukraine. The US imposed a ton of sanctions on them. In fact, Russia is the most sanctioned country in the world today. Now, the list is very long and it includes everything from seizing money from Russian billionaires to banning transactions on SWIFT. But the biggest sanction hit, I would say, is freezing over 300 billion of Russian central bank assets. Now, these are assets held in the United States and within their financial system. And whether you agree with the sanctions or not, I leave it to you. But let's deal with the facts. Because of this move, many countries are increasingly aware of the dangers of holding your money outside of the country. And that's why we saw Russia in a mad scramble to quickly diversify their oil and gas revenues outside of the dollar. For example, they started selling their gas to China for the yuan. But just because it's the Chinese yuan doesn't mean there's zero counterparty risk as well. Anything could happen. China could very well go crazy with their monetary policy and start devaluing the yuan by printing money as well. And this is why physical gold could very well come back as a medium of exchange or an instrument for trade. Yes, it is a physical commodity that needs to be shipped and its price can fluctuate in the spot markets. We all understand that. But it's better than having fiat currencies that eventually lose value thanks to inflation. It is guaranteed over a long period of time to lose purchasing power. Plus, you don't need to worry if a particular central bank decides to go crazy with their monetary policy, right? And unless you store your gold reserves elsewhere overseas, it can't get frozen or sanctioned away. There's zero counterparty risk to worry about. But a big shout out to our sponsor today, Private Internet Access. We all know the importance of keeping some money outside of the banking system, especially in gold. We want privacy for our wealth, and you should be treating your data the same way. Now, online browsing isn't as safe as it used to be. With all types of hackers and scams out there, you need to be protected, guys. You don't want your identity stolen and any of your financial accounts compromised. And this is why having a VPN is so useful. It keeps your data and activity confidential away from the hackers. And the great thing is that PIA is completely web-based. You can download it on your phone through their app or to your desktop and you can get started. In fact, you can use it for up to 10 devices at a time, including your phone, desktop, and tablet. Now, PIA, they have world-class servers that covers over 83 countries, including each and every state in the United States. And if I'm accessing my trading and stock market accounts, I want to make sure that no one is watching me and that my details are completely private. And you can get started with private internet access with a 82% discount using the link in the description below. Plus, you'll also enjoy 3 months for free just for being an awesome subscriber to this channel. So check them out and get protected today. Now, don't get me wrong, the majority of transactions will still be in fiat currencies. It is impossible for gold to replace all fiat trade because it is simply more convenient. But there's likely going to be a place for nations to start using gold as a medium of exchange to settle the trade of goods and services. Is definitely possible. Now, firstly, trading in gold is logically feasible. Countries can directly use gold to buy commodities and products. It's basically going to be the same process as a country importing physical gold from another nation. The gold is transported via plane or shipping vessel, nothing fancy. And the process is simple. The seller ships their commodity to you, maybe it's oil, maybe it's wheat, and then the buyer ships the gold in return at the same time, or depending on the agreement. It's basically a form of bilateral trade. Now, secondly, countries can easily acquire gold to build a stockpile to trade. Today, there are many outlets to buy gold from. You can buy gold from the COMEX in New York or the local London market in the UK. In the East, you can buy gold from the Shanghai Gold Exchange in China. And let's say you don't want to deal with any country. Nations can also buy gold directly from the IMF. But it's going to be a little trickier because you need an 85% supermajority vote from the IMF Executive Board. And that means you definitely need the support of the United States, which has 16.5% of the voting power. But either way, if a country can't mine their own gold, they can always buy it from the various superpowers depending on their preference. If you're a NATO country, you can get it from the US. If you're part of BRICS, you can get it from China or even the new gold exchange in India. So there isn't a problem here. Now, definitely, there will be certain countries that will benefit from this arrangement more than others. Countries that have huge gold reserves and those that produce tons of gold will be the big winners. However, it's no different than countries that are blessed with huge oil reserves like the United States, Saudi Arabia, and Russia. So if we look at the gold reserves, we can see that countries with the biggest reserves are the US, Germany, Russia, and China. Now, obviously, we know the numbers are just what they officially declare, but it does show us who is most likely to benefit. But taking a look at the biggest gold producers, we can immediately see that the top dogs will be China, Russia, and Australia. They produce over 300 tons of gold each year. And this is significant because once gold starts being used in bilateral trade, no matter how small, it'll be a wake-up call to the rest of the world. People will start realizing that gold is more than just a store of value that you bury under the ground. This will help to revalue the price of gold. And I'm not going to give a price prediction, guys. I'm not clairvoyant, but it will be higher. So if you're holding gold, you'll benefit as well. And personally, I've been buying gold for close to 10 years, and it's all about having money outside of the banking system just in case we hit into runaway inflation. To me, it is the ultimate credit default swap against the Federal Reserve and the global monetary system as a whole. Because I know one thing for sure, sooner or later, the boys at the Federal Reserve, they're going to lower rates and start printing money again. Maybe it's 5 years from now, maybe it's a year from now, but there's always a chance that they might lose control and kick us into a hyperinflation hell, where inflation just goes above 20% or even 30% easily. Then we'll see a mad scramble towards true stores of value because no one can last through that level of currency devaluation without a panic. Inflation today is almost at 10%. Now, I believe eventually gold will come back as money, at least in some parts of the world, not as physical bars that we carry around, but a gold-backed currency. And if a country was to do it, it'll probably be China or Russia, countries that don't own the reserve currency but have tremendous incentive to challenge it. However, that is probably the final step. It might be even linked to a new digital currency. But before that happens, we will need to see countries start trading with gold first and getting used to it as money. I believe sooner or later, nations will use gold as a medium of exchange to settle trades and transactions with each other because it eliminates the two biggest risks of modern money: currency devaluation and counterparty risk. Countries won't need to place any trust in gold because it just is. Gold is simply the physical embodiment of trust. So let me know what you think in the comments below. Will gold come back as money, especially in bilateral trade? Are you buying more gold today? Let me know in the comments below. Stay safe, be sure to smash the like button and subscribe as we navigate through these crazy times.